Let's be honest, most people lose money trading crypto. Charts, indicators, and hype make it look easy, but emotions destroy more portfolios than bad trades ever will. So today, I'm cutting through the noise to reveal the top 3 crypto trading strategies that actually work, proven, data-backed, and used by traders who win consistently. If you stay until the end, you'll walk away with the clarity and confidence most traders never find. Before diving in, let's be clear, there's no magic button that prints money. These strategies require patience, discipline, and risk management. But once you understand how they work, you'll realize crypto isn't random chaos, it's a game of probabilities and psychology. So let's start with the first strategy, the breakout strategy. A breakout happens when price finally escapes a key level it's been trapped under for days or even weeks. Think of it like pressure building inside a balloon. Eventually, it pops. Smart traders use that moment to ride explosive moves before the crowd catches on. The trick is identifying consolidation zones, areas where price moves sideways with low volume. When volume suddenly spikes and price breaks above resistance or below support, that's your signal. But not every breakout is real. Many are fake moves designed to trap impatient traders. The confirmation comes from volume. If you see strong volume and a candle closing clearly beyond the level, that's your green light. To manage risk, set stop-loss orders just below the last support if you're long, or just above resistance if you're short. This strategy thrives in trending markets and works beautifully on Bitcoin, Ethereum, and mid-cap altcoins when volatility is high. It's simple, visual, and powerful when executed with discipline. Now let's move to the second strategy, the RSI divergence strategy. RSI, or Relative Strength Index, measures momentum. Normally, when price makes higher highs, RSI should too. But sometimes, price rises while RSI falls. That's a bearish divergence, showing weakness beneath the surface. The opposite is bullish divergence, when price makes lower lows but RSI rises, signaling buyers stepping in. These divergences often appear before major reversals. Traders who spot them early can enter before momentum shifts. To use this effectively, look for divergences on higher time frames, at least the 4-hour or daily chart. Combine that with key support or resistance zones for extra confirmation. Once divergence forms, wait for a candle that breaks in your favor, then enter. Keep your stop-loss tight because not all divergences play out right away. What makes this strategy powerful is that it helps you buy low and sell high, something most traders struggle with. It teaches patience and forces you to wait for high-probability setups instead of reacting emotionally to quick moves. Now let's talk about the third strategy, the risk-reward strategy. This isn't about predicting direction. It's about ensuring that when you win big, and when you lose small. Before entering any trade, define your risk-to-reward ratio. Suppose your stop-loss is 2% below entry and your target is 6% above, that's a 1-to-3 ratio. Even if you're right only 40% of the time, you'll still profit over time. This strategy turns trading from gambling into probability management. The key is sticking to your plan. Never move your stop-loss out of fear or close early out of greed. Combine this with position sizing. Never risk more than 1-to 2% of your portfolio per trade. That way, even several losses won't wipe you out. The best traders in the world don't win every trade, they just manage losses better than everyone else. Once you understand risk management, you'll realize trading isn't about being right, it's about staying in the game long enough for your edge to work. Now, here's something most YouTubers won't tell you. These strategies only work if you master your mindset. You can have the best system in the world, but if fear or greed controls you, you'll still fail. That's why every professional trader emphasizes psychology. When you feel desperate to win back a loss, step away. When a trade feels too good, it usually is. The goal isn't to win every trade, it's to stay consistent, disciplined, and calm. Crypto markets reward emotional control. The market doesn't care about your feelings, it reacts to liquidity and behavior. The sooner you accept that, the faster you'll grow as a trader. Let's recap. Strategy 1, breakout trading. Wait for consolidation, confirm with volume, and protect your capital. Strategy 2, RSI divergence. Use momentum shifts to catch reversals before the crowd. Strategy 3, risk-reward management. Always trade with a plan and favorable ratio. Together, these form a framework that works in any market, bullish, bearish, or sideways. You don't need secret indicators or bots. You just need structure, clarity, and patience. Simplicity is what wins long-term. So, if you've ever felt frustrated watching others profit while your trades fail, take this as your wake-up call. Start journaling your trades. Backtest these strategies before risking real money. Learn from every loss and treat trading like a business, not a gamble. The difference between a beginner and a pro isn't luck, it's discipline. Build that, and profits follow naturally. And here's the truth, the market will always test your patience, emotions, and beliefs. But if you stick to proven strategies, manage risk intelligently, and avoid hype, you'll last longer than most traders. In crypto, longevity equals profit. It's not about one big win, it's about compounding small wins consistently. That's how real wealth is built. So, if you found this valuable, make sure to hit that like button and subscribe for more real trading content. No hype, no guesswork, just strategies that actually work. Stay sharp, stay disciplined, and I'll see you in the next video.